Everyone, welcome to Smart Investing. I'm Albert, and today's video is going to be about the banking sector. So I have 5 stocks here, and we're going to jump right into the first one, which is FVCB. So markets are open. It is 12:27 p.m. So you might see some movement on the chart, and that's because markets are active. So you might have different prices listed here. So pay no mind to that. It's more of an estimate. So right away, looking at the numbers, $1 million company, 236. We have here 52-week high and low. Only a difference of like $4. Not much range on it. PE ratio's at 10. And these are like awful numbers. Very, very awful numbers. Very low volume, as we can see here. Then we have earnings, pretty bad. Does not pay a dividend, which is kind of rare. Usually banks pay dividends, but I guess this one doesn't. And that would actually make sense because the market cap is really low compared to a lot of banks. And then why would you want to do a payout in profits when you're still trying to grow the company just with that market cap alone? So anyhow, the numbers at a basic level, they need work. But again, we can look at a more detailed insight when we look at the fundamentals and the technicals. So I want to look at the 5-year. Obviously, it's gone down, and then we have here not much of a range. Like I said, only a $4 range. And so I don't see it breaking into an uptrend anytime soon. Not at all. So we have here the 1 year. And then we have here a split actually recently. So this was on the 1st of February, a 5-for-4 split. And so we have that uptrend from June all the way to November, and then it dropped back down. And then 3 months, we have the slow downtrend, and then that drop. The 1 month, we have the drop. We have a nice curl up, and then it dropped back down again. So the technicals are bad. Obviously, it's not a good stock for the short term or long term. The numbers are pretty awful. Now, for financials, we have these earnings estimates. We can see here they have beaten earnings and they missed and they beat. They missed by a wide margin in 2022. That's expected for a smaller company. I'd be shocked. Excuse me. I'd be shocked if the company actually had it the other way around. If the earnings really outpaced the estimates, right away I would think a red flag. I would want to know what they did, how they did it. Obviously, looking at the numbers, it can be tough because it's not showing you if people got laid off and they're saving money, then they're using that money to offset their costs and stuff. So it just, it's just hard to determine what's being accounted for when you're using your numbers. So anyhow, moving on to annual estimates. So I do have 2022 estimates. So we have here pretty bad numbers. I mean, 1%. 12% ain't bad, actually, for ROE. Then earnings have gone up slightly and then stood flat here. Then they went up again. Then they try to dip down again. Now, for income and revenue, you can see here, it's not giving me revenue. Net income has gone up slightly. Balance sheet needs work. It's typical for banks. Now, cash flow, this is basically the most important thing for a banking services company. Now, so about let's say 348. So they're just slightly positive with only 4 million cash. But even if they do have it, so adding the net income, so 29 million in cash. Now, let's look at quants. So ratings for quants is 4 out of 5. I doubt it. Highest rating on this highest rating on these numbers is 7.54, which is growth. I don't see how this company can grow pretty fast. Last time they paid a dividend was in 2017. I guess that was the first and last time because it's been quite some time. Close to 5 years already, at least. So for this stock, it's no. Pretty awful. Gonna move on to the next one. Now, next one is CFR. So Cullen/Frost Bankers. I'm gonna look at the 5-year. It's been holding up. So $8.45 billion company. PE ratios is fair. 52-week high and low is pretty good. Earnings are pretty high. 8.8. Then dividends are 3.4. Actually not bad. Now, dividend yields at 2.65. These are above average numbers. I want to make sure if this company's in the banking sector. So, actually, this company is pretty good, actually. Like, if I have these ratings, right? Like, is it way below average? Is it just below average? Is it in the middle or fair? Is it above average or is it extremely above average? Like I said, I would say it's above average. Now, looking at the chart, so that's the 5-year. It's above its 2020 highs. And then you can see here, from there on, it just took that uptrend and like that. And now it's starting to go down slightly, but it had still held up. Still held up from its lows from the last time. So, looking at that, we have these really short bursts up, then these minor drops, then a bump up, then these short bursts down, and then going up again. And then this is actually pretty scary. You have this drop, tries to do it again, but kind of filled that time, and then it's weird to see that in December, because typically December was a good month last year. But anyhow, each stock is different. You can see it's almost on a downtrend, really. And so, even on the short term, so looking at the financials we have here, earnings estimates, Q1 2022, it met expectations, so they consider that a beat, meaning it won over estimates. So another win, and win. So they're trying to get more wins in a row. So for Q1 2023, I don't know when that's going to report, but eventually it will. So that said, we're still going to keep looking at the financials. And then we have here annual estimates. If it can show me, hopefully. It's probably frozen, so it's not showing me. So ROA, ROE, earnings per share, it's not showing me any of this. Net income is at 579 million. Revenue's not showing me anything. Then balance sheet, assets and liabilities. Then we have that's an asset. It's at 94%. So that's actually typically higher than normal. I usually see them in the 90s. I mean, it's not by much, 4%, but it's still pretty high. Operating, investing, and financing for cash flow. So 3 billion. Wow. So these people have negative cash flow. Probably at least 4 billion in negative cash flow. Now, net income, we'll look at that, see if that can cover the difference. Wow, so it doesn't even cover it. How are they getting that much cash flow when their net income is pretty much trash? So they're running a deficit. They're running a negative balance. So obviously this stock is awful. I thought it would be good, but if they would have had positive cash flow or close to it, maybe it would have worked out for them, but I don't see it happening. Don't see it at all. So for this one, I'm going to say no as well. Next stock up is CARE. That will be Carter Bank Shares. So for Carter Bank Shares, that's $17.29. Obviously, 2020 was a big drop, and it started to go up. $414 $414 million market cap. So small cap company. Looking at the numbers, another one that's awful. So the 1 year, obviously it's going to look like it's on an uptrend from the 2020 lows going to higher highs. Now for this one, it's for the most part close to its highs at 18. Just even a dollar more would catch up to it. So analysis on the quant rating. So 8.7. Give it an 8.8. Momentum 6.17. So highest rating again is quality. Overall rating is 5 out of 5. I doubt it for a cheap company like this. And it has actually beaten estimates 4 times in a row in 2022. And it looks like it's following that trend, beating its earnings estimates. Now for dividend, it looks like the first and last time they only paid was in 2020. So there we have it with that. I want to run over the more financials if I can get it. So it's not giving me any 2022 data. Nothing at all. Balance sheet is at 90%. Cash flow. Cash flow positive. Okay. So it actually looks like they. Let me see. Looks like they can pay dividends or at least support it. But I guess they're not going to. And it makes more sense that way. They can hold on to their money better. So, surprise quality 8.8. So, anyhow, this company is okay, actually. The range is at $6 range. So, I mean, it needs some work on the price. Market cap can be better. It's tricky. It's very tricky. Because right now, I feel fair about it. It's not bad, but it's not superior. It's not good enough. But, I mean, it's there. It's just doing okay. With this stock, I'm just going to say hold off on it. So, no decision for now. Hopefully, they'll do better. And we can get confirmation on numbers. The next stock up is SFST. So SFST, hardly any volume, pretty awful. Then we have here $127 million market cap company, then 52-week high and low. Comparing that is pretty good. Earnings, they're okay. I'd say they're fine. PE ratio needs to do better. PE ratio. And then there we have it for the charting. Let's see, charting is this. But it's even broke lower lows. So with this stock, it needs work. It needs a lot of work. Apologize for my camera. So with that being said, 5-year is pretty awful as well. Analysis, it is overall rating is 2 out of 5. Then we have your highest rating, 6.54 for value. Then we have here financials. You look at some fundamentals. So miss. So financials has lost its earnings actually and reported even less. Now, I don't see this stock doing pretty good. I mean, 52-week high and low, not paying dividends. Earnings are okay, but it really comes down to if Wall Street reacts positively about their earnings. Now, the debt is at 92%. I don't have anything else really. Everything else seems pretty normal. Let's see if they are cash flow positive. So 400 and so they're pretty much on zero when it comes to cash flow. I'm just reading something. So yeah, that's pretty much it. So for this company, I'm going to say no. Last company up, FFIN, First Financial Bank Shares. So that's the ticker symbol. Price is at 37 and 86. Now for the stock, 159,000 for volume, $5.4 billion market cap, 52-week high and low, a nice difference of $16. Then we have the dividend at 68 cents. I don't see this as a growth stock, but it does pay dividends if you have not noticed that. So charting looks pretty bad. Too expensive, really. And then the analysis for the earnings, Q1 has it beat. Q2 has it beat. They met expectations for Q3 and Q4. Now, yeah, it's just too expensive. And then now we're gonna look at the dividends. Now for the dividends, they had a raise from 2021 going into 2022. Then for the total payment was 68 cents, so it wasn't much. And that's pretty much it. So, no to FFIN. Can't remember the number. I just want to see the number. So, highest number was quality 6.86. Okay. Wall Street definitely does not like this stock. So, there you have it. Thank you guys for watching, and I'll see you guys in the next one.